Major currencies and market structure. Introduction to the module. Before trading Forex, one must become familiar with the main currencies and the basic structure of the market. This module will revisit the 6 most frequently traded currencies in more detail and describe how private investors access this vast interbank market. We would also be amiss if we did not mention the market protagonists who stand astride the entire financial system, the world's major central banks. Major currencies. 6 major currencies comprise the bulk of the daily trading volumes in the Forex market. As a consequence, they offer the deepest liquidity and lowest transaction costs. Success in the Forex market depends on ready access to trading prices at all times, so these are the currencies to choose. The US dollar, USD. The dollar occupies a central role in the global financial system. This elevated status is mainly because the US has the largest free market economy in the world, the most powerful military, the rule of law, and well-established institutions to defend those laws. The dollar is the primary global reserve currency. Many countries and institutions hold it as a store of value and a means of payment. International payment in dollars is not unusual, for example, for crude oil, even when it is the local currency of neither counterparty. Most quoted Forex rates also have the dollar as the base currency, that is, United States dollars per Swiss francs at 0.9500 means $1 equals 0.9500 Swiss francs. The euro, EUR. The euro began life in 1999 as the single currency for most member states of the European Union. It had the ambition to rival the US dollar as an international reserve currency. The Union certainly has economic clout, the rule of law, as well as strong institutions. However, political and economic uncertainty has hampered its adoption. So, although trading volumes have at times rivaled those of the dollar, the euro never gained equal status as an international reserve currency. Nonetheless, it is one of the few currencies whose typical Forex quote versus the dollar has it as the base currency, that is, euros per United States dollars at 1.25 means €1 equals $1.2500. The Japanese yen, JPY. Although the economic might of the US or the European Union dwarfs that of Japan, the yen remains an actively traded international currency. However, weak economic growth and anemic inflation since an asset bubble collapse in 1991 have meant that interest rates in Japan have remained remarkably low in global comparisons. The availability of cheap yen loans has encouraged international speculators to use it as a funding currency. In other words, they take out loans in yen to buy high-yielding assets elsewhere. The British pound, GBP. Until the US overtook it following the Second World War, Britain was the world's largest economy and issued the primary reserve currency. British post-war economic decline compared to the US and an emergent Japan, and then the creation of the euro, have diminished the status of the pound. It has, however, retained its position as the base currency in price quotes versus the US dollar, that is, cable at 1.1550 means £1 equals $1.1550. The Swiss franc, CHF. Despite its small geographic and economic size, Switzerland punches above its weight on the global financial stage. Certainly in the past, its military neutrality and its strict banking secrecy laws contributed to the perception of Switzerland and the Swiss franc as a financial safe haven. These factors have become less important over time, but the franc has remained remarkably stable due principally to its limited supply. The Canadian dollar, CAD. The Canadian dollar gets its forex nickname loonie from the indigenous bird, the loon, that appears on the $1 coin. Canada is among the wealthiest countries in the world in terms of GDP per capita, one the largest in surface area, and is a member of the G7 group of advanced nations. This status gives it a sizable voice on the world stage and one of the 6 most frequently traded currencies on the forex market. Access to the forex market. The forex market is a decentralized financial market. It is essentially a global network of thousands of banks, in hundreds of countries, who trade currencies with each other. These banks or other intermediaries provide access to the market for firms and investors. The interbank market. To operate in the interbank market, a bank must demonstrate its creditworthiness to other banks. All potential counterparties must establish a credit line with each other which sets limits for outstanding engagements. Only then are professional forex traders working at those banks permitted to buy or sell currencies with each other. Just because a bank can trade with any other bank does not mean the other bank will always want to. In these cases, banks call on the services of a forex broker. The broker's role is to match willing buyers and sellers at all times. Of course, the creditworthiness rule still prevails. The broker will only match buyers and sellers if they have credit lines with each other. A few banks occupy the privileged position of the market maker. These banks are committed to providing a dealing price to any bank with whom they have a credit line at any time. The advantage of this role is that market makers enjoy outsized trading volumes on which they can earn spreads, the difference between the price for buying and that for selling. The disadvantage is that it is the counterparty, not the market maker, who chooses the moment of the trade. The retail market. Firms and investors access the forex market through a bank or through an intermediary who then relies on a bank. Large firms typically trade currencies using closed online platforms provided by their banks. Internet-based forex trading platforms provide access to private investors. These forex trading providers deliver live prices at a speed and cost rivaling those enjoyed by professional traders. Central banks of the G7 countries. An essential role of a country's central bank is to provide money to the banking system. It is the so-called lender of last resort. The central bank determines both the price at which it lends money, the interest rate, and the quantity. In this way, central banks broadly influence financial conditions in the local economies. Infrequently, central banks try to determine the external value of the currency through direct intervention in the forex market. As the issuer of the US dollar, the US Central Bank, the Federal Reserve, carries considerable sway in the market. The other G7 central banks, the European Central Bank, the Bank of England, the Bank of Japan and the Bank of Canada, are also closely watched. As the global economy has lurched from crisis to crisis in recent decades, so the role of the major central banks has grown in importance. Summary. Successful speculative forex trading requires real-time access to liquid markets and an understanding of the principal market protagonists. The 6 most frequently traded currencies generally fulfill an essential requirement in that their liquidity is ample, price always available, and deep, additional prices available beyond the first. Any bank in the world can trade with any other bank as long as a mutual credit line exists. Brokers and market makers ensure that buyers and sellers always find counterparties. The bank's closed online platforms and internet-based currency trading services provide fast and cheap access for firms and private investors.